Let's talk about LLC taxes with no income. Okay, so here's an overview I want you to pay attention to. So how do you actually file taxes for an LLC with no income? Now, the thing is that depending on your LLC tax structure, you might be required to file your business taxes in years of no activity, and you should always plan to file an LLC tax return even when it's not required, because you never know. Okay, so after you hit the pause button on your business, it might seem counterintuitive to file a business tax return. It's not really required in every case, but you should expect to file your LLC taxes every year that your business exists, even if you have little to no business activity. Let me just quickly break it down for you. The question is, do you have to file taxes for an LLC with no income? Well, the short answer is yes. You must always file your LLC taxes when you have business activity, revenues, deductions, and credits. So absent any business activity, you might be able to skip filing your LLC at the federal level, your LLC tax return, but remember to file your personal tax return when you earn income. So whether you are legally required to file business taxes with no income depends on how your LLC is taxed. LLCs have the unique ability to be taxed in many ways, and each taxation status has a set of rules for business tax filings. And this is really important to really abide by those rules. Don't forget about state tax filings. Businesses are registered at the state level, so you might be required to file a state return while being exempt from federal filing. So you want to check your state tax authority website for state tax return information. So no matter your LLC tax classification, operating at a loss or with no income doesn't preclude you from filing your tax return. So it's really important. It's important at this stage, and it's really important to understand that you need to file taxes for an LLC with expenses and no income. LLCs with no income but deductible expenses can actually offset personal income or future business income through the net operating loss deduction, the null deduction. Okay, and so if deductions and credits if they neutralize your revenue, meaning you reached your company's break-even point, you must still report the activity through an LLC tax return. So the bottom line is what? You need to file your LLC taxes when your business brings in money, either through revenue or a loan, or when it is eligible for a deduction or tax credit. By filing annual business returns, you are making sure the IRS doesn't ding you for a failure to file. You also run the risk of appearing like your business is just a hobby when you don't consistently file a return. So when you treat your business like a hobby, the IRS will do the same. So filing your annual small business taxes, income or not, is one step to prove that you don't treat your business as a hobby and that you are seeking to profit each year. And so this is kind of important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So when we talk about LLC taxes, no income, let me give you a few pro tips to sort of help you understand how to navigate the whole process. Now, let's talk about filing requirements for sole proprietorships, partnerships, and corporations. You don't always have to file a federal return for an LLC with no business activity, but check with your state tax authority about filing state taxes for your LLC. So find your business taxation status. I will explain to you in the next few minutes how to actually treat your LLC based on the category you're in. So let's talk about the requirements for LLCs treated as sole proprietorships. So LLCs taxed as sole proprietorships don't have to file an annual federal business tax return in years of no business activity. Only single member LLCs, in other words, LLCs with one owner, can be taxed as sole proprietorships. So single member LLCs are pass-through entities that report business activity on the owner's personal return, right? So what happens here is that unlike C corporations, pass-through entities are not subject to a uniform small business tax rate. And what happens again here is that pass-through businesses are taxed at the business owner's individual tax rates. So your single member LLC files a Form 1040 Schedule C to detail a business revenue, deductions, and credits to the IRS. So since LLCs taxed as sole proprietorships don't file a separate business tax return, they're called disregarded entities, which are basically inseparable from their owners for tax purposes. So the bottom line here is that you don't have to file Schedule C for your single member LLC when your company brings in less than $400 for the year. So that's really, but we still recommend attached in Schedule C whenever there is a business activity. Though, because it's one of those things you're trying to show the IRS that you are running your business as a business, not as a hobby. Let's talk about requirements for LLCs treated as partnerships. So you don't have to file a federal business return when there is no business activity in your inactive LLC taxed as a partnership. LLCs treated as partnerships report their business activity on Form 1065 as a pass-through entity. Partnerships pay taxes through each owner's personal return, not at the company level. Still, an LLC taxed as a partnership files the information return Form 1065 to relay earnings, deductible business expenses, and credit to the IRS. Since partnerships file information returns, they are not considered disregarded entities like businesses taxed as sole proprietorships. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC taxes with no income. Let's talk about requirements for LLCs treated as S corporation or C corporation. So when taxed as a corporation, your business must file an annual return even when the company lies dormant. So when you first register your LLC, you are automatically taxed as either a sole proprietorship or a partnership, depending on the number of owners who are called members. So you may actually elect S corporation taxation by filing Form 2553, or you can choose C corporation taxation by filing Form 8832. So you have the choice here in terms of what kind of route you want to go, okay? Now, C corporations actually file Form 1120 annually. So the form for C corporation is called 1120. C corporations are not pass-through businesses, unlike all other taxation options for LLCs. A separate C corporation tax return is filed, Form 1120, and as separate taxpayers, C corporations pay a 21% corporate tax before distributing earnings through dividends, and shareholders are taxed on dividends on their personal returns. So that's for C corporation. For S corporations, they actually must file information return Form 1120S each year, regardless of business activity. So S corporations maintain pass-through taxation, where business income is taxed solely on owners' personal returns. And so you might wonder what a business tax return looks like in years when your LLC is actually inactive. While it might feel weird, you'll be writing in a lot of zeros, and tax software can walk you through filing your inactive LLC tax return. And you got to have that. Now, it's one of those things where I want to say here, when in doubt, you always want to file an LLC return. Okay, look at it this way: the IRS cannot penalize you for filing a return for your inactive LLC, but it can inquire about why you didn't file a return at all. And so even if you have like one small business transaction during the year, it's best to file your business taxes even when it's not required. The bottom line here is you're trying to cover yourself, right? It's really not only great when it comes to showing the IRS and state tax authorities that you are compliant, but also shows that you're not treating your business as a hobby, but as a real business, right? It's all about appearance, and appearance is really important when it comes to fiscal compliance, not only in the short term but also in the long run. Let me give you the approach you need to follow here when we talk about LLC taxes and no income. How do you file taxes for an LLC with no income? Well, just because your LLC has a year of hibernation doesn't mean it gets a tax break. Even with zero business activity, you might still have to file a federal tax return. It's like getting a gym membership but never showing up. You still have to pay. So the LLC's tax filing requirements will basically help you out because you are able to comply with the law, right? It's one of those things where you have to pay attention to the state you're in, but also to the classification that you have. Now, what about the tax filing requirements? So for LLCs are treated as sole proprietorships, basically they are responsible for filing their taxes using either a 1040 Schedule C or a 1040 Schedule C EZ form. So this form is to be included with the individual's personal income tax return and will report any profits or losses from the LLC. The LLC owner must also pay self-employment taxes, which are based on their net earnings from the business. So this is kind of important to really separate. Let's talk about LLCs are treated as partnerships. Now, LLCs are treated as partnerships. They file taxes using Form 1065. Remember that Form 1065 is actually an information return, and that return actually reports the LLC's income, deductions, gains, and losses to both partners and the IRS. And the form must be filed annually by the 15th day of the fourth month after the end of the tax year. It's important to know that each partner will actually receive a Schedule K-1, Form 1065, that's used to report his or her share of partnership income and deductions on their individual return. For LLCs treated as S or C corporation, basically they'll have to file Form 1120 or Form 1120S, depending upon the election. And it's important to understand that you always have tax elections. You can choose either Form 8832 or Form 2553. And so when we talk about elections, remember that we're speaking about federal and state income taxes. So basically, federal and state taxes can also apply to LLCs depending on their type of entity classification and the location within a particular state jurisdiction. Okay, and all LLCs are obligated to meet their federal tax filing responsibilities, regardless of whether there was a taxable income action or process during the year. And so it's one of those things where you have to always make sure that you file taxes to comply with the law. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC taxes with no income. I said to you earlier that it's just better to file taxes no matter what, right? Now, there are some benefits of filing taxes, whether LLC taxes or C corporation taxes or S corporation taxes or partnership taxes or whatever, okay? Filing taxes may not be the most exciting tax on your to-do list, but as an LLC owner, it can bring significant benefits to your business, even if you had no income during the year. First and foremost, filing taxes on time can help you avoid hefty penalties and interest charges that can quickly add up and hurt your LLC's bottom line. Keeping up with your tax obligations shows that you are a responsible business owner who takes compliance seriously, which can improve your credibility with lenders, investors, and customers. And that's really important. So filing taxes can also help you take advantage of various deductions and credits available to LLCs, even if your business operated at a loss during the tax year. By keeping accurate records of your expenses and deductions, you may be able to reduce your overall tax liability and keep more money in your LLC's pocket. Since it is actually a legal requirement, filing taxes can help you maintain good standing with the state and federal government, which can have long-term benefits for your LLC. Let me give you an example. Some states require LLCs to file annual reports or pay a minimum tax to keep their status active. So by staying on top of your tax obligations, you can avoid losing your LLC's legal protections and having to dissolve and start over again, which you do not want to have anyway. And there are consequences of not filing taxes. Remember, even if your business had no income, failing to file taxes for your LLC results in a slew of consequences. So the IRS can actually charge your LLC fees for not filing a tax return, which can be a significant financial burden, especially if your business is struggling already. So if you fail to pay your tax bill on time, you may actually incur penalties and interest charges that can quickly add up and make it challenging for your LLC to get back on track, financially speaking. There are also penalties. So penalties and interest charges start accruing the day after your tax return was due, and they can be as much as 5% per month or a part of a month for the penalty for failing to file your tax return on time. And the maximum penalty is capped at 25% of the unpaid taxes. And so this is really it's really important to understand that. Now, according to the IRS, if your return was over 60 days late, the minimum failure to pay penalty is $435 or 100% of the tax required to be shown on the return, whichever is less. You may also lose the ability to claim deductions or credits associated with past tax years. Some deductions and credits have time limits and must be claimed on a tax return for the year they were incurred. So if the LLC fails to file the tax return for that year, what happens here is that it may forfeit its right to claim those deductions or credits in the future. So this is kind of important. Let me give you an example. If an LLC incurred a loss in a previous tax year and wants to carry that loss forward to offset future profits, it must file its tax return for that year on time. If it fails to do so, it may lose the ability to carry the loss forward and reduce its tax liability in future years. So it's one of those things where you have to really think about what really works for you at the state level, but also at the federal level. Let's just dig a little deeper here in terms of filing taxes for an LLC with no income. It's one of those things where you have to understand that everything, again, and I think I've said this before, but everything happens at the state level, and you have to really see what really works for you. It's one of those things where you have to ask yourself, do you need to file business taxes if there's no income? Well, even though the answer to that question will depend, we will say, to be safe, you always want to file taxes. You always want to file taxes. And so the way you file taxes basically will depend upon whether you are a single member LLC, multi-member LLC, you're a C corporation or S corporation. In all cases, if you have no clarity, if things are not really clear for you when it comes to what kind of situation you should go for, please let us know in the comment section here. You can ask your question, and one of our team members will get back to you, and we'll let you know based on your location, based on your city and state, and your particular LLC status, whether or not filing taxes will make sense for you. But again, to be safe, to be on the safe side, it's always great to actually file taxes. And it's better to spend $100 or $70, $75 or $50 to actually file your taxes, and to be on the safe side to actually incur a fee for not filing. Okay, and remember that you also have to think about what happens at the state level, because throughout this conversation I've been talking about the federal requirements. That's true, but every state has its regimen, if you will. It's a slew of regulations, so you really have to make sure that you are applying simultaneously. You are compliant simultaneously, federally, but also at the state level. Another thing I want to say here is that when we talk about the LLC taxes with no income, you also have to remember that you always have to think about the partners. So if you have a multi-member LLC, you have to actually send Schedule K1 to all the partners, all the members rather, that actually were part of the LLC during the year. And that's basically another legal obligation that you really need to abide by to make sure that you're steering clear of trouble. And one thing I also need to say here is that if your LLC has losses, or your LLC is running a somewhat complicated operation in terms of your tax structure, but also your operations, your niche, and so on and so forth, please avail yourself of professional help. Okay, it's always better to spend a few $100s here to maintain your LLC status and to actually comply with the law than to actually regret it down the road. One thing I want to say before actually closing to this conversation is that when we talk about filing a tax return for an LLC with no activity, it's one of those things where you have to also think about not only the short term, but also the long term. Remember that your LLC is here to stay, hopefully. And so you have to maintain a certificate of good standing, or you have to maintain good standing at the state level. And some states actually want you to actually be in good terms in terms of filing your taxes, to be able to assign to you that coveted certificate of good standing. And now that good standing is important because you are going to use it in a lot of operations, in a lot of processes. You have, if you are applying for a loan, for instance, for business loan, if you're applying for, let's say you want to get funding from investors, some investors want to see from you a certificate of good standing. So when we talk about LLC taxes with no income, that's why you want to keep that streak, quote unquote, that fiscal streak, and so that winning streak, if you will, whereas you are able to show investors that every year you have filed your taxes. Imagine if you were actually applying for a business loan and the bank wants to see your tax returns for the last 3 years, and you have actually filed taxes for the last 2 years, but you actually skip filing taxes for 1 year. Imagine the problem that could cause during the underwriting process. That's why you do not want to have a break. You do not want to have a hole in your tax filing process. And even if there's There's zero. There's a bunch of zeros that you have to put on your Form 1065 or Form 1120S or Form 1120. You still want to do it so that you are able to actually cover yourself. And it's one of those things where, especially if you have multiple partners, because again, the info that you have in your Form 1065 or Form 1120S will be carried on to Form 1040 and through Schedule K1. So that has consequences. Okay. So the thing is, we're not just speaking about a tax return on one form. We're talking about tax return on multiple forms, on multiple Schedules K1, on multiple Form 1065, and also 1040. Okay. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about LLC taxes, no income, and I give you the overview, the pro tips, the approach. I also gave you some information about the different types of LLCs that you can actually consider. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.